All right. Hey, friends. Ron, back here again with Logical Loan, your mortgage guy. Today, I want to talk about 10 potential things that can possibly kill your home loan in the process. These are things that I've seen myself with potential clients in the process of doing a home loan, or I know other loan officers that have experienced these things. I'm hoping to help those of you who are potentially looking to buy a home or refinance to avoid some of these big issues. So let's get right into it. Number one is your credit score drops. One of the biggest one that happens right in the middle of a transaction. Let's say for some strange reason, somebody is pulling your credit. You go to get a new car loan, which you should never do if you're in the process of buying a home, by the way. Or something else happens of some kind. Maybe there's identity theft or something. But if your credit score drops in the middle of a home loan, it could potentially completely kill the deal. Now, it isn't necessarily a killer because even if your score drops, it could still be passing. Okay. But my word of advice here is that if you're in the process of looking to get a mortgage loan of any kind, you should always protect your credit like it's your castle. You really want to watch out and make sure that your credit stays good or actually improves in the process of getting a home loan. Number two, you can't source the funds of your down payment. I just had this happen recently, a couple weeks ago, where I was working with a client. They had said that they could source the funds for the down payment, and it turned out they could not source the funds of the down payment. So the cash that they had put into the bank account could not be sourced. And so now we have to wait till later so that they can source those funds. Underwriters, in most cases, underwriters are going to require you to source those funds. Now, the reason I say most cases is because it's actually all cases, but in most cases, if you have, let's say, a cash deposit, okay, they're going to require some documentation unless it's already there. Now, if it's already there, then they don't need it. But having the source of funds is very important. And if they can't source the funds, then you can't use that in the process of getting a home loan, such as for your down payment and closing costs and so forth. Number three, a bad appraisal. What happens if you're in the process of getting a loan and the appraisal comes back low? Well, this can be a big problem because a lender is only going to lend a certain amount of money, what we call the loan to value. Now, it depends on the type of loan. Sometimes the lenders will lend 100% financing. That's typically on a VA loan. But on most other loans, they're not going to lend you 100% of the value of the home. What does that do to your situation if the appraisal comes back low? Well, that could potentially put you in a position where now you have to put more cash into the transaction. And if you don't have the cash, then that could kill the deal. So you want to make sure when you're working with a great realtor that they are confident that this price, if you will, sale price, is going to appraise at that same price. So the home that you're purchasing actually will appraise. If you don't have a great realtor, reach out to me. I have realtor partners throughout the entire United States. The only state right now I don't have in is the state of New York because my company that I'm under, Barrett Financial, is not yet licensed in New York. But if you even need one of those, let me know, and I can put you in touch with people because I do know people in New York. I just don't work in New York yet, but I'm licensed myself and the rest of Barrett Financial. We are licensed in every other state. All right, number four, interest rates rise. So what if interest rates rise right in the middle of your trying to find a home? Let's say I have you pre-approved. You're out there shopping. I have you pre-approved for a certain loan amount. Well, what a lot of people don't know is that really what we have you pre-approved for is not so much the loan amount, it's actually the payment, because the payment is having to do or pertaining to your debt to income ratio. And that's super important when it comes to lenders. When lenders are lending money, they like to see that you're under a certain threshold of your debt to income ratio. Well, what happens if interest rates go up in the process of you're shopping for a home? That could mean now that your payment goes up. And if your payment goes up, now it may be the case that you no longer qualify at that specific price point. It may be the case that now we have to lower your price point. So that could potentially kill the deal. Now, of course, some of you may be saying, just like I am, hey, this is a non-controllable. Very true. But in these cases, what we want to do is we want to have some flexibility in the amount of home that you're trying to purchase. That's very important. So just keep in mind, interest rates, if they go up, they could affect your ability to get that specific loan. All right, moving on. Number 5, new liabilities on the credit report. This actually pertains in a little bit to one of the other ones we talked about a moment ago. So what happens if in the process of a loan, let's say your loan is locked, you're moving forward, you have a contract to purchase a home or you're refinancing of some kind. Let's say all of a sudden something pops up on your credit report that wasn't there before. Well, now the underwriter has to potentially take that, they have to take that into account against your debt to income ratio if it's a liability. That liability could be a new car loan, which again, if I haven't said it already, or if I haven't said it enough, don't shop for a new car, or get any car loans in the process of purchasing a home. In fact, don't let anybody pull your credit in the process of purchasing a home unless it's your loan officer, your advisor, or your mortgage broker. Okay. But new liabilities, those can totally mess you up in the process, because now that can hit your debt to income ratio, and it can also affect your credit score, which of course also is another factor in getting approved for a home loan. All right. Number 6, new credit card debt. This is similar to the last one. Some folks just don't know that, hey, in the process of getting a home loan, not only is it not a good idea to have institutions, financial institutions or anything else, pull your credit in the process of getting a loan, but also it's really not a good idea to get new credit cards, because that can look bad to an underwriter, right? So let's say you sign up for a credit card during the process of getting a home loan. And then the next thing you know, that actually dings your credit and brings it down. And the underwriter starts saying, well, what's happening here? Why is this person getting new credit in the process? That can raise red flags potentially with the lender. Okay. So this is, there's a little bit of gray area here, because in the process of trying to fix credit, sometimes I will, with my clients, recommend that you open a credit card of some kind to establish credit. That's a totally different thing, though, than if you're actually pre-approved, or if you're in the process. If you already have a purchase contract, you're in the process of buying a home, and then you apply for a new credit card. So again, be very careful. Protect your credit at all costs in the middle of purchasing a home or refinancing. Okay. 7, if you lose your job. Oh no. If you lose your job, and I know for some of you, of course, or most of you, it's not expected. But if you lose your job in the middle of the transaction, that could potentially kill the deal. Now, it doesn't necessarily kill the deal, because what if you lose your job and then you get another one in the same line of work or the same field? Well, all you would need potentially there is a letter of explanation, and then that may suffice for the underwriter. However, if you lose your job and you don't have one to replace it, now all of a sudden that puts you in the danger zone, because, we have to now remove all of that income potentially from your loan. And now that means that you probably qualify for less house, or maybe don't qualify at all at this point. So with that, also in the process of getting a home loan, make sure you're very careful not to rock any boats at your current job if you can avoid it, because that could very much dramatically affect your ability to get not only just any home, but if you have one specific home that your heart is set on, and you're ready to, you're already packing up and you're moving, and the next thing you know, it goes dead because of that, then it creates, of course, tons of anxiety, potential depression, sadness, all that kind of stuff that we want to try to avoid. Really, really important. Try to keep your job straight if you can during the process. All right, number 8, gift fund source backs out. This one is pretty rare, but there are situations where you may be using gift funds. Family, friends, someone you know who's gifting you funds in order to put a down payment on a house. Now, what happens if that person backs out? Well, now you have to come up with that cash potentially, or you have to replace it. And if you can't, now we're in a position where the loan would fall dead because now you don't have the funds. So in this aspect, make sure that if you are using gift funds for the down payment on a house, make sure that those funds are solid. Have a serious conversation with that person or persons and make sure that you're confident at a really high confidence level that those folks are going to come through when the rubber meets the road. I'll mention one more thing about gift funds. Some of you out there are planning on using gift funds, and you've taken those funds and you plan to move them from one account to another. In most cases, you don't need to transfer those funds from one account to another, say from like your parents' account or a family member or friend's account to yours prior to the transaction. In most cases, you don't need to do that, right? You can just leave those funds there, and those funds can be transferred directly from that gift fund source account to, let's say, title or escrow in the process of buying the home. All right, a couple more here. Number 9, the contingent sale buyer backs out. What does this mean? This is also rare, but it can happen. This one just happened to a client of mine just about a week ago now. I had a client of mine I was working with. I had her pre-approved. She was going to purchase a brand new build, a new house, but her purchasing of her home, her new one, was contingent upon the sale of her previous home, the one she was living in. And right in the middle of that transaction, her buyer, the potential buyer, they actually backed out. And so now we're back to the drawing board because now that loan can't go anywhere because in her specific case, she is not able to afford having 2 loans at one time. So in other words, in her pre-approval, she was not able to have one loan from her old house and keep that loan in place and then also have the second one. It was a contingent sale. So if you're in a contingent sale situation, if you're selling your home and you're planning on moving to a new home, that's amazing. Make sure though that the realtor that you've hired to list your home for sale, make sure they are communicating a lot with the potential buyer's agent, and make sure that you have a pre-approval letter, not just a pre-qual letter. You want to make sure that this potential client is pre-approved and they are solid and they're ready to go, okay? Because you definitely don't want them backing out on the last day of closing, which is what happened to my client. And now we've got to start all over. All right, last one, number 10 on my list, large bank deposits or transfers. This is a huge one, and a lot of times I've seen this happen where folks just don't think about it. Underwriters don't like to see these large transfers in the process of a transaction, whether funds are going into your account or whether they're leaving your account. You want to be very careful with this because in many cases, if that happens, it doesn't necessarily kill the deal again, but you're going to have to describe or provide explanation as to why those funds are either going into your account or out of your account, right? If anything, it's probably better just to avoid having funds, large sums of money going into or out of your account in the process of a home loan. Remember, guys, the a very important thing I think a lot of folks don't think about this is that when you are going to try to get a home loan, you're just borrowing money from another group of people. That's it. They're just you can imagine walk into a room somewhere and you have a piece of paper with your application. You say, maybe imagine a table of 10 people and they say, why should we lend you money? That's kind of how it is. A lot of us don't think about that way because it's all electronic today. It's digital and stuff like that, but it really is that way. Lenders want to make money, of course, they're investors and they want to lend you money at interest, right? But they have these terms and conditions that say, why should we lend to you, right? It's not exactly that hard lined, but they have those terms and rules that say, hey, okay, if we're going to lend to you, then you have to meet all of these criteria, right? Because it's, in many cases, it's a lot of money, right? If you're buying a house at 3, 4, 5, 6, 7, 8, $900,000, right? It's a lot of money for even one, well, especially a lot of money for one person, but a group of people to hand you over for a house. So just keep that in mind that there's this transaction happening, right? It's not just a nebulous form, a bank out there that's giving the money to buy a house. It's effectively, really, it's just a group of individuals, a group of people. And those group of people, really, they could be your neighbors. They could be somebody next door to you, could be a president of a bank or somebody who's investing in those banking institutions. Yeah, so just keep those things in mind. That's 10 things. And thank you guys for watching. Check out my description box below for all my contact information. If I can help you get a loan, I definitely will. Let's keep it logical.